On today's episode, we are going to take a look at 3 stocks that I believe are a great buy for the beginning of the year. The first stock is one of my favorites, hitting markets like artificial intelligence, gaming, infrastructure as a service. The second is an international company, one of the biggest gaming companies out right now, and has taken a recent hit. The final is a very small gaming company that has gone down over 40%. These are all companies that I purchased this week, and for each stock I will do the following. First, we're going to take a quick overview of what they do, then we're going to take a look at their financials, and finally we're going to end with my overall thoughts and risk on the company. Like always, welcome back to the channel. My name's Jose Najarro, and I am a self-taught investor who's been studying the market for over 6 years. Before we start, let's make sure to smash that like button. It helps so much with the YouTube algorithm. And if you want to know when I buy or sell stocks, on the description and on the pinned comment, you should see a link to my Discord channel, which is free to anybody that wants to join. You should also see links to my other socials as well. Also, don't forget to get your free stock on Webull if you sign up using my link and deposit $100. And finally, if you want to learn more about becoming a better investor, make sure to check out my Patreon, which is open for new students for the first half of the month. All right, so the first company we are going to take a look at is Nvidia, one of my favorite stocks right now. This is a tier 1 company for me. So right now, Nvidia, this is ticker NVDA. For those that are not familiar, for the past year, Nvidia has returned about 117% to investors, right now sitting at $323 billion of market cap. If we take a look at its peak, I think it was 582. Right to now, it's down about 10% from its all-time highs. So for those that are not familiar with Nvidia, the main things that they do is they hit 4 sectors. The first sector that they hit is the gaming sectors, and this is where they use their GPUs for PC gamers. And a lot of their GPUs are used for other stuff as well. They're used for data centers, which is something that is needed for high power, high process computing, artificial intelligence. They also have used it in professional visualization. This is like the workstations for like making animations, movies, AutoCAD programs. And finally is the automobiles, again, with the artificial intelligence and the machine learning to move into the autonomous vehicle segment. So these are obviously, to me, every time I talk about Nvidia, the easiest way to say is the technology that's pretty much running the world right now and is pushing it to new heights. And here, Nvidia also mentions what are some of their growth drivers. The first is gaming. We're seeing huge growth in gaming right now, and the gaming market is one that I believe will continue to grow as the years progress. Artificial intelligence, artificial reality, and virtual reality, and self-driving cars. Those are the 4 biggest markets or growth drivers for Nvidia right now. Nvidia is also doing pretty smart with acquisition purposes. In this past year of 2020, they ended up buying Mellanox, and right now they are in the process. I think it has been approved. It has been announced already that they are purchasing ARM. Another one that's going to continue to grow. They're very aggressive right now in acquisitions. They're very aggressive in the markets they're hitting. All right, so next what I want to take a look is at some technicals. I am more of a long-term investor, so technicals is something I take a small look at, but nonetheless is something I do look at. So the first thing I'm looking at is this current stock price. Is it overextended from its moving averages? And we can see, no, the current price is actually sitting at its moving averages. And I'm very, very happy to see. This is one of the main reasons I believe it's a great time to continue to add on to Nvidia. Since August of 2020, so since early August, so for the past 6 months, 6 to 5 months, I want to say Nvidia, even though it's been moving, it's been pretty volatile, it hasn't really moved much in stock price. And we can see right now it's just building up volume by these graphs right here. It's building up volume in this area. So I'm saying it's kind of consolidating, building up a nice base for a future leg up in the upcoming years. In the next 4 or 5 years, I think Nvidia will be one of my biggest winners. If we take a look at future growth for Nvidia, they are expected to grow dramatically, 14.6% revenue growth for the next 3 to 5 years on average. The earnings are also expected to grow pretty strong. If we take a look right now, they are profitable, which is great news. They have positive free cash flow, and they have positive cash flow from operations, as well as strong revenue growth. And if we take a look at their balance sheet, it is pretty strong in my opinion. Right now, they have about $10 billion in cash and they have about $7 billion in debt. But I was actually looking at their 10K, at their previous 10K report, or 10Q report, the previous 10Q report, and over half of that debt is not due till past 2040. So that's almost 20 years from now that most of this debt is due, and most of this, they even have a debt that's due till 2060. So that's 40 years from now. So this debt is almost nothing, and it's below 4% interest rates. So right now, Nvidia's, hey, let's grab money. Right now, it's pretty much free money for us. Let's build up our cash position. Let's continue to build up this debt to make more heavy acquisitions. I am very, very bullish in Nvidia right now. So my thoughts on Nvidia, this is one that is, like I mentioned, a tier 1 stock for me. Very, very bullish, and one that I'm going to continue to add on, maybe not every week, but at least a few times every other month or so to continue to build up a position. Nvidia, to me, the biggest risk right now is most stock. I mean, it's gone up 117% in the past year. That's pretty overextended to its 200 moving day average. So we might see a pullback there. But regardless, for me as a long term, I don't see too much red flags for Nvidia. Financials are strong, earnings are strong, balance sheets are strong, cash flow from operations strong. The how hard the management is doing to acquire more companies and still be a leader in this market is still looking strong. So for me, Nvidia will still remain a tier 1 stock for me for 2021. So now the second company we are going to take a look at is Tencent. This is one of the biggest gaming companies out there. So for those that don't know, Tencent ticker is TCEHY. You can trade it over the counter. This is a Chinese company, and because it is a Chinese company, it has taken a bit of a beating. It took actually a heavy beating in the late December from its all-time highs. It was down almost 16%. That is impressive. That is insane. I mean, I wish I would have picked up at those levels, but no, I ended up picking up recently. For the past year, Tencent has received 44.13% gain, and right now I believe it has a market cap. And right now it has a market cap of about $700 billion. I do believe this probably might be my next trillion-dollar company in the making. Nvidia, I do believe, is another one that's gonna go there. So Tencent, like I mentioned, sitting right now at about $72, and at all-time highs of about $80 on November 5th. So let's take a quick look at the revenue breakdown for Tencent. So Tencent, they owned a lot of different markets, and it could pretty much be broken down into 4 markets. Social networks, which makes up about 23% of their revenue. Online games, which makes up about 33% of their revenue. Fintech and business services, which make up 26% of their gain, and online advertising, which makes up 17% of the gain of their revenue. So we can see they also have Tencent Cloud, a market I'm very bullish on. They are in the games, in the advertisement, and the fintech business. The social networks might not be too much for me, but in there they have like music networks, they have like your social platforms like WeChat and all that. And they also have, I believe, some form of educational platforms there. So overall, the market they're doing is super amazing. And to me, the biggest reason for going in there is because they are one of the biggest gaming companies. They own companies like Riot Games, which own huge games like League of Legends. They own Epic Games, who has Fortnite and who has the the Unreal Engine, which is a competitor to Unity. They owned about 30% of C. They owned Supercell, which is another gaming company that has a lot of mobile gamings. They own Tencent Music, Huya, Doju. They own portions of JD. So they own a lot of big companies in China and even a lot of big companies here in the United States. All right, so now let's take a look at some technicals. First, we're looking, is it overextended? We can see right now, no, the stock price is not overextended. It is sitting next to its moving averages. We can see at one point in December 28th, it almost hit its 200 moving average. That was a great opportunity, if I may say so, and I missed it. Actually, I did not miss it. I put money to work every Thursday. So obviously, if it wasn't a Thursday, I did not get able to enter at those prices. but we can see it's not overextended. And another thing, very similar to Nvidia, Tencent since June of 2020 has pretty much not moved that much. We can see it's been pretty volatile, up and down, but it's pretty much sitting at that stock price of high 60s, mid 70s for the past 6-7 months. So I believe right now people are focusing on other companies. They're focusing on electric vehicles. They're focusing on marijuana. They're focusing on other markets that seem on a lot of SPAC deals right now. And I'm not saying those are bad deals. I'm also focusing on some of them. But sometimes I do believe it's great to look at the places where many people are not looking at. We can see there's plenty of volume being built up in these levels right here. So again, great time for me to continue to add on into Tencent. So if we take a look at their future growth, Tencent right now is expected to grow 18.9% on average for the next 3 to 5 years. Again, super growth. Anything growing over 15%, I believe, is a strong growth company. They're also expecting to grow their earnings at fast levels. We can see right now they are profitable. They do have positive cash flow from operations, and their revenue just continue to go up. If we take a look at their balance sheet, it's also pretty strong. They have a nice amount of cash, about 234 Chinese yuan in cash, and they have about 259 billion in debt. So right now they have way more debt than cash, but remember, they are profitable. Remember, they have cash flow from operations, and they have positive earnings. So it's okay to kind of overlook that. So to me, what are my biggest risks for Tencent? To me, the major risk right now is that it is an international company. It is a company in China. We're seeing a lot of the Chinese government going against some of their companies like Alibaba. I do believe they're also going after Tencent for monopoly issues. Another reason is the huge tensions between the United States and China right now that kind of creates risk for investors. So that's why I believe if one invests in international companies, to always only limit your portfolio size into the other countries to make sure you don't get burned when things go bad. Outside of that, the games that they have and the companies they have invested on, I believe, are super smart. I'm very bullish in Huya, very bullish in Doji, very bullish in C, in Epic Games, in Riot Games, and all those other games that they have right now. The final company we are going to take a look at is another gaming company, but this one is only a gaming company. It doesn't have any other markets, and this is CD Projekt. Right now, you can trade it over the counter as ticker OTGLY, and we can see for the past year, this company, it is down about 41% from its all-time highs, and for the past year, it is down about 9%. So this is, I believe, a Polish company. Yes, a Polish company right now. And they are known for 2 big games. And they have a market cap of about $7 billion right now. For those that are not familiar with CD Projekt Red, they own 2 major game IPs. The first one is going to be the Witcher series, which many have seen from the gamings or in the Netflix series that has done amazing. The second is Cyberpunk. Cyberpunk, unfortunately, has made bad news and bad PR the past few weeks just because this is a brand new game, but it came out with a nice amount of bugs that some might say is unplayable. To me, I do believe this has overspooked investors a lot, obviously making the stock price drop 40%. And I've been talking to other gamers. I've been watching YouTube videos. I've been following on Twitch. I've been following Google Trends. It seems overall people are still happy with the game. The gamers I'm seeing are the gamers I've talked to are still enjoying the game. Some of them are doing a second run through. The comments I'm seeing on Twitter and Google Trends, not many are looking for refunds. And the overall game has done amazing. Even though it just came out on December 10th, it became one of the best, of the most played games of 2020. It had one of the most concurrent players at one time. And it is also a game that has sold the most for 2020. Again, a game that only came out in December beat other games that came out earlier this year. So to me, this is a great buying opportunity for CD Projekt Red. So right now, if we take a look at their charts, the first thing we're looking at is, are you overextended? And obviously with that stock price, the price is overextended, but on the bottom side. So with that rubber band effect, I'm hoping to see a pullback right up. But again, I'm a long-term investor, so I'm holding CD Projekt Red for the next few years unless I find better opportunities. But I do believe right now this is a great time to buy for with a company with strong IP and such low market cap valuation. So another thing, do we have strong volume? I do believe there is a nice amount of volume. We can see here the volume levels at this stock price is pretty strong. So it is building, it has been a nice strong base level, support level for CD Projekt Red. If we take a look at their future growth does not seem that exciting. It's about 2.6% on average for the next 3 to 5 years. So many people might be like, say, why are you investing in this company that's growing so slow? Again, this is a very small gaming company. They're not releasing games every month, every year. So what ends up happening is they release one big game, and that one big game does amazing in the first few quarters. Eventually, people obviously start to purchase the game less because it's older or everybody has it already. So revenues decline. So revenue forecast for gaming companies tend to be pretty low for that example. And I do believe with this market cap valuation, I could see companies like Microsoft, who has been buying a lot of small independent game studios for about similar price. I know they just bought Bethesda, I believe, the creators of Elder Scrolls, for about $7 billion. So this can actually be in that eyes for some of these bigger gaming companies. If we take a look at their balance sheet, very strong. They have no debt at all, and that to me is amazing. And they have plenty of cash at hand as well. The final thing I want to take a look at about CD Projekt Red is the individual insiders. Individual insiders still own 31% of the business. The general public owns 45%, and institutions only own 23.2%. So institutions are still not heavy in the company. Once they start entering, this is gonna definitely drive this. This is probably gonna drive the stock price up. So again, that's very bullish for me. 40% I think is an overreaction, and I do believe this is probably going to be a great buy for me for the next 2-3 years to come. To me, the biggest risk with CDR is a lot of headlines are still going to be coming out about this game, about this company, and might continue to make this stock a bit volatile for the upcoming days, the upcoming weeks, maybe even the upcoming months. With some people taking refunds. Until all the headlines is done, I do believe it might just be very volatile. But from there on, I do believe this is going to be a great buy. So I hope you guys enjoyed today's episode. Let me know what you guys thought. Make sure to hit the thumbs up. Make sure to subscribe. Take care, guys. Have a good night and see you next time.